stress or tightness. It is not a substitute to sound liquidity management. Rather, it is a last resort mechanism available only when all the market-based or group funding options have been fully exhausted. The ELA framework is designed to be transparent, predictable, and effective. Its key features include stringent eligibility criteria, collateral requirements, prudent haircuts, appropriate pricing, confidentiality, safeguards, and clear exit strategies. We have drawn on international best practices, adapting them to Sierra Leone's financial landscape and dynamics to ensure that this facility is both contextually relevant and globally credible. Mr. Moderator, distinguished ladies and gentlemen, to be eligible, banks and deposit-taking microfinance institutions must demonstrate solvency, provide evidence of exhausting other funding avenues such as interbank lending and intergroup financing, and submit a credible recovery plan within an agreed time frame. Collaterals for ELA must be of high quality and conservatively valued, with haircuts applied to reflect liquidity and credit risk. In times of crisis, an expanded but carefully risk-assessed collateral base may be accepted. Pricing is appropriately set at a few percentage points above the standing lending facility of the bank to discourage misuse, with stricter terms for prolonged use. Approvals are treated with utmost confidentiality to avoid adverse market reactions, though recipient banks must meet strict reporting obligations. Each institution must present a clear exit plan to restore self-sufficiency, as failure to meet agreed timelines may trigger resolution measures. It is important to underscore that access to ELA is a necessity and not an entitlement. Institutions must approach it with highest or utmost level of professionalism, diligence, and accountability. Mr. Chairman, distinguished ladies and gentlemen, our expectations of commercial banks and deposit-taking microfinance institutions are clear. Institutions must strengthen their liquidity risk management by conducting regular and realistic liquidity forecasts, diversifying funding sources, and reducing over-reliance on short-term wholesale funding. You must engage early with the Bank of Sierra Leone, communicating emerging liquidity pressures before a crisis erupts. Furthermore, you must ensure compliance and transparency by providing accurate and timely data, strictly adhering to ELA terms and conditions once approved. I want to encourage our banking and non-bank communities to view this framework not with apprehension, but as a shared safeguard that protects the integrity of our financial ecosystem. In conclusion, Mr. Moderator, distinguished ladies and gentlemen, The ELA framework is a safety net, not a cushion for poor risk management. Its effectiveness depends on prudent banking practices, intense supervision and enforcement by the Bank of Sierra Leone, and trust and collaboration between the regulator and the industry. As the common adage goes, prevention is better than cure. And we urge all banks and deposit-taking microfinance institutions to prioritize liquidity resilience so that the ELA framework remains a rarely used instrument. As we deliberate today, let us remember that a resilient financial system is the foundation of inclusive economic growth and sustainable development. Let this seminar serve as a platform for knowledge sharing and exchange, and as a call to action to build together a system that can weather any storm. This seminar is an opportunity to comprehend and to clarify issues on ELA operations, and we count on your full participation. Together, we will keep our financial system safe, stable, and resilient. Thank you once again for your presence, your partnership, and your continued commitment to financial stability. I hereby declare this seminar open and wish you fruitful deliberations. I thank you.
So, this is a very inspiring statement delivered by the Deputy Governor of Monetary Stability. So, next on the agenda is the presentation to be done by Mrs. Jerry Committee. For that, I will ask kindly ask you that we don't be charged. Usually, those of us take care. So that
coming smooth. Let's find. Yeah. Okay.
morning, everyone. I'm presenting the operationalization of the liquidity, emergency liquidity assistance frame yearly. Yes, could you, excuse me? Please, could you please help? These are the outline. We'll take you through the introduction, the powers of the ESL to give yearly, the eligibility criteria, terms and conditions, the collateral that are required, the process of application, monitoring and disclosure, and the forms and exit strategy. Then we go to conclusion. And before the conclusion, we'll be taking into some templates, assessment templates that the ESL will be using to assess the yearly before giving it out. BSL under Section 59, the BSL Act has a mandate to give emergency liquidity assistance yearly. By definition, ELA is a temporary support given to the bank or depositing financial institutions that are solvent but illiquid. The main purpose of this is to promote financial stability and prevent one in the banking system. There are core principles of the ELA. It boils down to solvency, conditionality, collateralization, and liquidity. So PSL has powers to give the ELA. Some of the powers are these. Assessing financial stability, assessing what we'll be looking at the balance sheet structure. So you want to know if the institution will be able to pay back in the short term. And there are some criteria that we'll be looking at on the next slide. ESL will determine the solvency, viability, the tenor, interest rates that we'll be using, and the collateral that will be required. And we'll also be giving haircuts to these collaterals and any other condition that ESL will come out with as it deems fit. Looking at the eligibility criteria, first of all, the institution should be licensed with the ESL. That's the first criteria. And looking at solvency, when we say solvent, the bank should be able to be solvent or meet the CAR for the next 6 months. And also the currency that should be met. And looking at provisioning, you want to know if the bank or depositing financial institution has adequately provided for the assets quality or assets that are not performing. And you also look at the profitability of the institutions, and also if there is possibility for payment company for foreign banks or institutions for the payment to be able to come in when there is a shortfall. So that will be looked at when you say solvency. It's a forward-looking approach. It's not compliant. Say the bank has met the 15% minimum. We go beyond. It's forward-looking. And another criteria is that it is temporary, and the bank or BTMFI should have been swapping for less than 182 days. If it is more than that, they are not qualified to be given the ELA. And all other funding avenues should have been exhausted. As the other speakers said, they should have gone to the standing lending facility window at the BSL, interbank placement, or sourcing funds from the parent company for those institutions that have paid and foreign subsidiaries, etc. It's the last resort platform after all these sources have been exhausted. Then you look at the collateral. It should not be encumbered. It should be perfected. By that we mean you should not have used the collateral in other loans, getting other loans, and it should be perfected by the FC with the collateral at the FC, at the PSL, and also at the Administrator General. The process is there. It should be signed registered LL number, etc. for those that will be using real estate as collateral. The other slides will be explaining the type of collateral that we'll be using. And there should be a credible remedial plan. There should be strategy on how we will be able to pay back. So BSL, looking at all of those criteria, will determine if the institution is eligible. And also, if we go back, in looking at to determine the institution that are eligible, we'll look at the balance sheet structure, as we said, the market share, the deposit base, interconnectedness, and it's not only for big institutions. Yes, we look at the districts, the domestically systemic important banks, or we look at all other small banks. They are also eligible if they meet all of these criteria. And for terms and conditions under the ELA, yes, as we said earlier, that ESA has the power to give, determine the tenure. Yes, it's 14 days. The first 14 days, and there's possibility of rollover. The bank or financial institutions or depositing in financial institution will have to 4 days before the expiration of the 14 days. Will have to talk or write into the BSL for a rollover, and all in all, the yearly assistance will not exceed 182 days. So for first, after rolling over the first 91 days, to go to the next 91 days, you will have to, the BSL will reassess the entire submissions. The bank will have to submit the cash projections, all of that will be looked at, and all of those strategies, the payment strategies, will have to be looked at before yearly will be extended to them. As we said, the rollover will be reassessed after the first instance. Interest rates as included in the yearly framework to factor for it. That is what is in the manual or the framework that was sent to you earlier. The amount will be based on 2 weeks liquidity forecast. The years will have to forecast the liquidity position for 2 weeks. Then after that, for the other ones, the 30 days to 90 days cash flow will be looked at for BSL to determine if the institution is ready or is eligible to benefit from the ELA. And the collateral requirements. Yes, the BSL is looking for high value collateral. However, high liquid collateral. However, liquid collaterals will also be accepted. And these are the collateral for government securities, T-bills and bonds. The method used will be on accrual basis. Accrued interest, expected income will be accepted. And for high quality credit claims, also real estate and forex deposits will be accepted. For real estate, BSL is expecting banks to have like 2 values for real estate, and the average will be looked at, will be taken as the value of the real estate. And BSL is expecting that collateral should be over and above the loans or the ELA that is being requested for. So BSL will factor risk in all of it. There will be airports for like the government security. The airport now is 10%. This airport I can explain better. And if you have a collateral for 100 million, the value according to BSL will be reduced to say 90 million. That the portion of 10% will be factoring credit risk, market risk. Over collateralization and concentration limits also will be looked at. Limits when determining whether the institution is eligible. We look at concentration. Who will benefit? It should be for paying customers that are coming for their monies. And for there is also a portion for government guarantee. When the collateral is insufficient and probably the solvency is an issue. However, government can only guarantee when there is expectation, for example, when the institution has gone through resolution, there is expectation that a new bank or new institution will be born out of the giving the yearly. So government, as long as government guarantee, the yearly will be given. And there will be an agreement signed between the institution and the BSF. And the agreement for under collateralization, when you're giving your, under the condition for giving yearly, there are conditions. One of them is that the bank will be restricted from giving dividend. And several other things, salary caps will also be factored. Moratorium will also be looked at for giving credit lending. And the banks of deposit-taking financial institutions will be expected to be sending daily liquidity returns. And those returns will be put together on a weekly basis to give to or to inform the ELA team, because there's an internal ELA team that will assess all the conditions and eligibility before approvals. And the process are these. First of all, the institutions are expected to send to the governor. The application should be sent to the governor, and the board resolution should accompany the request, because you want to know that there is consensus in the board for this ELA. And also the board resolution should also, the minutes of the board on that should also follow the application. There are other documents that are needed. The liquidity forecast, as we spoke earlier, the plans, the strategy, all of that are needed for this as the ELA. Proof of solvency. You have to show that the institution is solvent. The BSL will not be given to any insolvent institution unless with government guarantee and with the expectation that a good bank will be born out of the insolvency. And the agreement, as we said, there are conditions. Those are the conditions I explained. That's no moratorium on lending, freezing of dividend, and etc. So these are the process. As we spoke earlier, we sent to the governor, the request is sent, and the BSL team review, the ELA team, the internal team will review this, the solvency, collateral, adequacy, and all of that will be looked at. Then the BSL team can decide whether to a condition and disbursement agreement to be signed between the BSL and the team. And the BSL will be looked at performance. There will be strong monitoring after the ELA is given. In the event that the institution falls short, there will be sanctions following. And if the BSL is rejecting the proposal, there will be reasons given to the institutions. The ELA, the process, as we just said, there are checks that will be carried out before disbursement. It should prove that the institution is solvent, is viable. What we mean by viability is that the institution should have been making profits for 2 years. You do not want to give ELA assistance to an institution that is not making profit. And all other funding source would have been exhausted. And then the institution expected to send the liquidity forecast, listing of all the collaterals that are available, because we have to screen them. There are roadmap on how to screen or assess or evaluate the adequacy of the collateral, and board approval with government plans. Strategy to pay back is expected. The turnaround time is 48 hours. Immediately all documents are received. BSL will not process halfway. All documents are supposed to be received before the processing of ELA will be done. The decision-making committee, after the ELA team, internal team, which forms various departments, or 9 or so departments, after the technical work has been done, it will be sent to the governor and agencies for their approval. And that will inform the financial policy committee. We have a committee internally that is responsible for financial stability. That committee will be informed of the decision of the ELA team and the approval process. There are airports, as we said, the airport for 10% for government securities and for real estate and credits that will be determined by the BSL from time to time. So, what are we expecting the institution, the banks, deposit taking financial institutions to maintain robust liquidity buffers? You should ensure the buffers are robust, and because that will be taken into consideration over time, and you identify, put in place the eligible collateral which are enforceable in the legal courts or foreclosure courts. You should be eligible. There should be contingency plans, funding plans, and those should be discussed annually on an annual basis. And also, when these are found out by ways that they are not credible, there are sanctions that will follow. Sanctions for non-compliance. And this, we have prompt action area in the Banking Act and the framework. So those ones will come into play also. If banks fail to repay and fail to adhere to what has been agreed in the agreements, yearly agreements with the BSM. And also, it's a shared responsibility. We have the banks, the deposit financial institutions, the BSM. We all have the responsibility to ensure that it is for the betterment of the economy. As we said earlier, there will be strong monitoring. The banking supervision team will be monitoring. We said earlier also, conditionality. The condition in the agreement is freezing of dividends, salary caps, moratorium on lending, enhanced reporting. So you have to consider all of these facts during the board meetings before they make the decision to come for the ELA. So, and it will not be made public. The ELA will not be made public unless there is financial stability issues. It will not be made public to prevent bank or more hazards. So it will not be made public unless banks or deposit financial institutions fail to adhere to the agreement. Their names will be published on newspaper, and to exit, you will pay everything, or Bank of Sierra Leone will seize everything or stop everything if the institution fails to meet the criteria. Yes. When banks default, as we said, collateral, foreclosure, and sanctions. We will sell the collateral, we go to the fast-track commercial courts and foreclose on the collateral. And sanctions will follow for non-compliance. And exits, as we said earlier, we will pay the BSN can terminate for non-compliance or insolvency risk. In conclusion, the highlights, what we've talked about is the turnaround time is 48 hours. Only banks and deposit financial institutions are eligible, which are solvent and but facing temporary liquidity problems. They should have exhausted all other venues before coming to the BSM. And we have some templates that we will do quickly. Those are the assessment templates. So this is the template to assess the ELA. Solvency, when you want to determine if the institution is solvent. Financial soundness, you want to determine, we look at the capital adequacy ratio, it should be greater than 15% currently. As we said earlier, we look also historically the performance of the CAI, and we also look at several forward-looking factors of profitability and adequacy provision you made on risky assets, etc. So the bank's position will be there, then we look at the compliance, if it is compliant to the minimum or not. We put liquidity coverage ratio, which is in by it's a new phenomenon. The highest liquidity, which probably the deposit, and you look at how if in 30 days, if people come to the bank and decide to begin to take their monies, you the bank be resilient enough to be able to pay? All that will be looked at. The threshold should be greater than 100%. The net stable funding in the institutions, you look at it to know if the criteria should be greater than 100%. For some funding, for example, deposits, you have some countries you have core deposits. It's different. They have their core deposits as savings and time. But for what we've seen in Sierra Leone, when you talk about core deposits, you're looking at the current, because most times it's huge and it's not moving. It's even greater than the savings that you can. Normally looking at the balance sheet structure or the consolidated position of banks, you see that the current or demand deposit forms more like 76% of total deposit, while savings you have 20 and time just the minimum. So core deposits has different interpretation from countries to country. We also look at the non-performing loans. The tolerable limit should be less than 10%. However, banks are expected to have a low non-performing loans by strategically ensuring underwriting procedures are followed and loans are given prudently. That also will look at the leverage ratio, your capital. Greater than 3.5%, and compliance status will also be looked at. For asset quality review, we want to know that if the collateral are eligible, you've perfected them, you've gone through the right process, they are registered with the collateral agency at the PSL for movable and immovable, and also you've registered it with the Admiral Registrar General's office at CBD. All will be looked at. It should be perfected. The NM number, stamp, sign, all should be so that in the event of an issue, it will take factor risk out of it. So short-term liability. You want to know if there is a mismatch. You have to pay short if it will not bring problems in the bank or illiquidity. Deposit concentration, we look at the top 10 deposits. That's what we'll be looking at here. For our normal dealings or normal calculations at the PSL, we most times look at 5 top depositors that in the event their funds are withdrawn, also the system look at. For this case, for Black by now, when assessing this aspect, we look at top 10 depositors. In the event all their monies are withdrawn, what will be the condition of that? In other words, it's just that there are several scenarios that we're looking at. The baseline, the advanced scenario solvency we'll be looking at. Survivor period. If the ALA is given, will also be looked at. We'll do some stress testing, internal simulation to decide. The technical team, the ALA technical team will look at all of this. The recent audit findings, we see banks and especially bank sides expected according to the prudential guidelines to include charges or penalties or violations in their financial statements audited at the end of the year. So we'll be looking at all of those violations and see for the past 12 months what was the position, any adverse situation or condition. All we look at when deciding on giving the year. We look at the solvency, temporary situation, whether it is sound, it is just temporary liquid situation. All will be looked at. And the team, the ASF team will be giving some approval or recommendations or approve or reject to the main approval body after looking at all of the analysis of the conditions. Assessment template for liquidity. The bank name, the license number, or license dates with no numbers there, the period of reporting, the contact person, the chief treasurer, chief operating officer. The coverage ratio will also come into this. The net stable funding ratio will also loan to deposits. As of now, the maximum is 6% for the loan to deposits ratio. Now, the aspect of falling lending is also a factor. So the deposit base will have to change instead of the local deposit to falling, both falling and local. As of now, the cash reserve ratio that we will be looking at is still 12%. It should either be at the BSL, the bonds of the bank. It's also a factor. The 12% is inclusive of monies in the bonds and monies at the BSL against the deposits. The minimum should be 12%. We will have to look at it over time and see in the long run and in the future if the banks will be able to manage their cash position. Prudency. We look at several buckets. In the maturity structure, when you send your daily results, for example, the banks, you have different criteria. Now we're looking at here 1 to 7 days, the inflows, the outflows, the gaps, the cumulative gaps over the period, 8 to 30 days, 31 to 90 days, all will be looked at, then the cumulative gap over the period. We also look at the structure. I talked about core deposits earlier. The wholesale funding, the maturity profile of the liabilities, when we need to mature. We will not be able to pay when it matures. All we look at the interbank market. How often is the bank coming to the interbank market? But when it comes often, it's a signal or a sign or a red flag that something is going on. So we have to look at it critically. The solvency assessment also comes on at this one also. The CI is looked at, some performing loan, percent profitability, and all of that will be looked at. The value of the collateral, as we said earlier, we will take valuations from 2 variants for each bank or for each area that the banks or the state institution will be asking for. So the average of those 2 values, for example, we have value 1, value 2, we come up with the 160 and 170, so you have to put together. That's the value of the collateral. And an area cost will be taken out of it to determine the eligibility of the collateral. And stress testing and contingency planning should be adequate, and we look at it if it is adequate and prudent in law. We also be justifying the reasons for giving or rejecting any EA. BSL will give the recommendation under this also, approved by the committee. This is the loan agreements that we spoke about when it is agreed that the EA will be given an agreement to be signed by the BSL and the institutions. This is the format of the agreements. This is the format of the agreements. Communication. Yes. Post communication of the year. There will be internal review because we do not want to communicate yearly that the post problem in the system or what's wrong in the banking system or the positive in the financial institution. So strategy will be put in place by the team. The team, the early team will come together and inform the financial policy committee, and the strategy will be revised. And there are structure of your balance sheet, the loan book valuation, appraisal of the real assets, and comparison of unlisted equities, and several others will be expected to be sent to the BSF. And risk management also will be the risk management and documentation to look at all the documents and see if they are adequate enough for the ELD to be given. I thank you for listening.
Well. Thank you so very much, Mrs. Jerry, for that insightful presentation. As for the agenda, we have the question and answer session. And then for the sake of time, and because of today is Friday, we want to limit the questions to two institution. You can ask your questions and then we will answer them. The presenter will answer, or myself or any member of the department can answer. So, the floor is now open for questions.
David Samai from Access Bank, Treasurer Access Bank Sierra Leone. Thank you so much for the insightful presentation. It was really clear and well explained. My issue is around the collateral requirement. There you mentioned government securities, you also mentioned forex deposits, real estate, and all of that. So if a bank is coming for yearly, right, and they have enough government securities, right, that will take care of the all the conditions around, including the year for whatever yearly they are coming for. So, for example, a bank wants to come for 100 million, and they have treasuries or bonds that will cover that plus airport. But you have to look at other collaterals. The other question I have is the approval and the application process for accessing the yearly is looking very lengthy. Remember, this is an emergency liquidity. So if a bank or an institution has to go through all of this lengthy process, right, to access an emergency fund, I'm just wondering whether it is truly be an emergency liquidity or how do you classify that?
Yeah, thank you very much. To follow up on that question, so when you had, my name is Axelami.
Okay, sorry sir, probably goes like this, when you want to ask your question, you announce your name and your institution. Of course, so that we all know who is asking. Okay. But when you ask your question, you are asked to answer, another question will follow. By another person or by another institution. So, for us not to lose sight of the questions. So please, you can pause so that you answer the first question and then we go to your questions. Just hold on a bit, sir. So, Access Bank, to the first question that you pose. Yes, as long as the value of the T-bills, right, we know it's being valued on an accrual basis. So, as long as the value covers the amount that you are asking for plus the airport. Of course, normally when you are doing your reports, you normally ask for a collateral or a treasury bill that is 110% above the cash that you actually receive. So the same principle actually applies here. As long as it covers with that one plus the airport, then it's good to go. We will accept it. Definitely. And of course, we have run. That didn't come out, clearly in the presentation. But then we have ranked collaterals, a lot of priorities. And the T-bills and T-bonds that you actually asked about has the highest priority because it is really highly liquid. So it's up there. So, in fact, that would be best available for the central bank if you have T-bills or T-bonds. Because those ones, they can be converted quickest possible time. So to answer your question, yes, as long as it covers the amount that you're asking for yearly, and then plus haircut and the 10% above. I hope that answers your question, sir. So for the second one, the presenter will answer.
Okay, thank you, Mr. Tucker. And you notice in the presentation we said the turnaround time is 48 hours. So all of those templates you saw is for internal assessment. You are just shown for you to know what to be looking at when assessing. So as soon as you submit the requirements, they are not plenty. The list is there. If you look at your policy that you sent, it's all in there. When you send your documents, 48 hours, yearly or not. And if we're not giving you, send the reason why we are not giving.
So in addition to that, it's really an emergency security assistance. So we treat it as such. So the timeline, as long as all the central bank is asking for are in place, then there will be no waste of time to address the issue. So central bank can quickly mobilize its yearly team, and then they will sit and look at the merits of what you submitted and to us. And then after which we move and then make our recommendations to the governor, and then within 24 to 48 hours, that yearly must be granted. No. Let him ask.
Thank you, Mr. Chair. My name is Michael Amin. I'm board member of Access Bank. My question is twofold. One, it's with the treasury bills. The treasury bill is already treated under the master repo framework. So why are you taking a 10% haircut to that? The